Welcome back, everyone. If you're interested in buying into the retail sector, now might be a good time to do so, just ahead of the crucial holiday season. For our Picks and Pans segment this week, our producer, Jen Amos, joins us with some investing tips from all of the Weiss research editors. Hello, Jen. So nice to see you.
Good to see you, Jamie.
Okay, first of all, what would be a good way for investors to get some initial exposure to the retail industry?
If you want broad exposure to any industry, exchange-traded funds are a good way to go. In this sector, our ETF expert, Ron Rowland, recommends the SPDR S&P Retail Fund, ticker symbol XRT. Unlike a lot of similar funds that are heavily weighted toward the biggest names in the industry, this ETF is equally weighted across 68 different retail stocks, giving you great diversification.
Any funds, Jen, that Ron recommends staying away from?
He points out that consumer savings rates have improved over the last couple of years as the tough economy has made shoppers more frugal. But he thinks consumers may loosen the purse strings a bit this holiday season, which would lead to more upside surprises for retailers. If that happens, you don't want to get caught short betting against the industry. So he's telling investors to steer clear of the Direction Daily Retail Bear ETF, ticker symbol RETS. That fund would drop 2% for every 1% that the Russell 1000 RGS Retail Index gains.
Jen, any other picks out there that would benefit from a broad rally in the retail sector?
Yes. Amber Dakar is recommending Simon Property Group. It's the country's biggest mall owner and perhaps the best bet among real estate investment trusts. Tenants in the company's malls posted a more than 10% jump in sales in the last quarter, helping SPG more than double its net income. And Simon's stock has been on a tear for nearly the past 2 years, recently hitting a 52-week high. Plus, it's a good dividend play. The company recently announced a 33% increase in its quarterly payout.
Okay, let's get into some specific retail stocks. Which companies are the editor's best bets in the industry overall?
Well, it's common knowledge by now that retailers like Walmart and Target are solid plays because they have pricing power over their smaller rivals in several product categories. Mike Larson includes warehouse clubs such as Costco among his recommendations for the same reason. And Niles Mativ has told us he thinks online retailers, including Amazon.com and eBay, will continue to grab more and more of the overall shopping pie because of convenience and price.
And Jen, I know Tony Sagami often recommends retail stocks. Does he have any particular picks this week?
He gave us quite a few names. His #1 pick is the electronics retailer Best Buy. Its stock has been in a strong uptrend recently and is testing overhead resistance. A couple technology stocks are catching his eye as well. Shares of both Apple and Sony have been on fire recently, so Tony recommends waiting for a pullback, then jumping in. He also likes Tiffany because, as he says, rich people still have money. And just look at what the stock's done recently. It's been on a tear, recently breaking out to the upside. So Tony thinks it may be a good idea to wait for a dip in those shares as well before buying.
All right, Jen Amos, thanks so much for your time.
Thank you, Jamie.
Coming up next, we'll find out why one expert thinks discount chains such as Walmart and Target may not be the best performing segment of the retail industry in the months ahead. All that plus a closing comment from Martin Weiss. Money and Markets will be back in just a moment.